The social media space is really interesting for investing because you have a lot of bad actors in the space, like people trying to rip other people off. You see a lot of people using social media to accomplish stuff like that or to spread faulty information about markets and the economy. So there's some bad elements to it, but the reason I think social media is important and part of the reason I started using it is because it's just where younger people go to get their news.
Hey everyone, I'm Telis Demos, and I'm here with a bonus episode of WSJ's Take On the Week. We all know the economy is shaped by a variety of different forces. What the government does, foreign policy, the stock market, the bond market, the list goes on and on. But today, I want to get into something a little broader. I want to talk about generational shifts. As we move from one to the next, the ways that we talk about the economy, the things that are important, and the way that we get information about our investments and how we think about them, those things change. And so here to talk us through how people are navigating that transition and how new investors think about things is Kyla Scanlon. Kyla is an author and economic commentator. Kyla, welcome to the show.
Thank you for having me.
Kyla, let's start with how you got into this line of work. So you studied economics and finance in college, right? You had a job at a big asset manager. But what made you decide to start kind of putting yourself out there, like writing things, making videos? What made you kind of switch gears in that way?
Yeah, I've always been really passionate about economics education. So I sold cars when I was in college and was studying economics at the time.
You sold cars?
Mm-hmm. Hyundais.
Like at a car dealership? Okay,
yeah.
cool.
People would come in and not know what an interest rate was. And so that was really the moment where I was like, oh my gosh, we send people out into the world without any understanding of what the economy is. And so I graduated from my university and moved out to Los Angeles to work for a company called Capital Group and graduated.
Like one of the world's largest asset managers.
Yeah, and was in their early career program there. So it was a great program, great company, but graduated basically right into the pandemic. And so during that time, everybody was, locked inside and GameStop happened. And so I decided to start making videos, number one, inspired by the passion I had around economics education from that experience at the car dealership. And then number two, because I kind of needed something to keep myself sane during that time. And that was what I did and ended up, 4 years later, having so many opportunities because of that.
Interesting that you brought up that you were at the beginning of your career during the pandemic.
Mm-hmm.
And we talk a lot about around here about the ways that investors are kind of shaped by something that happened during their formative years that sort of defines how they think about investing for the rest of their lives, right? For people around my age, I think for a lot of us, it was the 2008 global financial crisis, right? If you're, say, maybe if you're a little older than that, it could be the dot-com bust and boom. If you're a little older than that, maybe it's the 1987 Black Monday stock market crash or the oil crisis of the 70s, right? Would you say that for the youngest generation of investors, for people who've started working or investing in the last 5 or 10 years, is the pandemic the thing that you think will sort of define the way that they think about investing for a while? I mean, obviously that was when you sort of kind of started, like you said, putting yourself out there as a commentator.
Yes, definitely. Because we saw so many weird things happen.
Yeah.
We saw GameStop, we saw AMC, we saw the rise and eventual fall and now rise again of crypto. And so I think a lot of people, that was sort of the moment, I think for many people, where the stock market kind of became a little disconnected from the broad economy. Fundamentals no longer were reflected. And that's what you saw with GameStop, for example. And so I think it's informed a lot of people, younger people specifically, their tendencies to maybe think through the lens of gambling rather than investing. A lot of people are aware of 401ks, and I do think the younger generation is investing and saving and thinking about that. But you have a big segment of them that are all in on these more risky bets.
Why do you think that is? Is that something cultural, or maybe it's, you mentioned the GameStop sort of meme stock moment, right? And that seemed like a time when, right, people were rewarded for kind of really going out there and, taking kind of a wild idea and running with it. And people made a ton of of money. And we talk a lot about, kind of buy the dip, right? Being the ethos of the markets today. And that's just worked again and again. I mean, heck, it's even worked now through this Liberation Day kind of volatility, right?
That's
Like
true.
the market ended up doing, not that bad in April.
For now.
So for now, right? We'll see. But what is it about the idea of gambling or treating investing like gambling? Like, why do you think that was it just the tools people had in their pockets made it more possible? As people are empowered to, invest more themselves, they have these tools in their pockets. It does put an onus on the information that they're getting and who they're listening to about investing. And so I want to know a little bit more about just sort of your, kind of emergence and journey, to doing what, a lot of other people might be doing for, say, a large newspaper or, other news organization, writing about finance and economics. And you're doing it, through a lot of social media platforms. You have a pretty wide following on Instagram and TikTok. What have you learned about sort of the way that people get information through those mediums that is different about how people might have gotten it from a newspaper? How has that information kind of funneling mechanism changed the way people think about investing?
It's quick. Yeah, I mean, the social media space is really interesting for investing because you have a lot of bad actors in the space, like people trying to rip other people off, put them into pump and dump schemes in crypto where they're like, hey, everybody go buy this crypto coin and I'm going to sell at the top and all of you are going to be stuck with, these losses. And so you see a lot of people using social media to accomplish stuff like that or to spread faulty information about markets and the economy. So there's some bad elements to it. But the reason I think social media is important and part of the reason I started using it is because it's just where younger people go to get their news, right? So a bunch of Gen Zers use social media and TikTok as their primary news source, and that might not be the best thing. But my theory is, I rely a lot on sources. And so like I read a lot of articles and I always reference those articles in my video from journalists and try to explain the news through the lens of economic education. So if we're talking about the labor market and the unemployment rate, like I'll try to be like, okay, this is the unemployment rate, but that's what that means. And look, here you can see it in action, right? And so that's how I try to think about my use of social media and my use of bringing people along in the economic and finance world. It's just where they are, and you have to think of it as a tool. And there are definitely bad aspects to it, but it's just the reality is people are there.
How do you think you've been able to sort of amass a following while giving like thoughtful economics talk? How did you manage to, sort of bring like, kind of nuance and like real information to people and have them resonate with it? Do you think that says that people are hungrier for that than maybe we give them credit for?
Yeah, no, I mean, people are super hungry for information. Like everybody wants to understand stuff. And if you can, and what I try to do is like, I try to make it fun and I try to make it interesting and I try to make it visual. And so how I got my start is by pretending to be Jerome Powell. I think I might be one of the only people in the world that's ever like dressed up as him. And that was fun and that was new. And
how do you dress up as Jerome Powell?
You
by
have
the way?
a suit and glasses.
Oh, okay.
So
okay,
you could do
okay.
it too. And you like, I don't know, talk like him a little, I guess. But that was how I got people interested in the Fed meetings, is because it was sort of this absurdist kind of skit style stuff that is actually painful to rewatch sometimes because I'm like, oh, goodness, that was a little, wow. It really took some big swings there. But I think that was a big part of it is you have to make it fun and entertaining. And people really want to know about the economy, but like a lot of times some elements of economics education can feel really detached from reality, or it's really hard and really abstract for people to relate that back to their lives. And so everyone wants to know how to make more money and to save and to be stable. You just have to give them an avenue and a path where they feel comfortable going down it. And a lot of things can feel like a little bit scary. Like when I try to read about telescopes, like the James Webb Telescope, sometimes I don't know where to start because I'm like, well, how do I start understanding outer space? And that's the thing. You just have to give people an entry point. And so that's what I try to do with my content. And hopefully I can find somebody that does that for telescopes,
Yeah. Maybe by leaning into the slight absurdity of all of it. Like that actually feels more real to people than just saying, this is meat and potatoes homework. Here are the absolute X's and O's that you need to know.
Yeah.
So maybe we could, I don't know, maybe we could have more fun around here at the Wall Street Journal once in a while.
I mean,
for us.
yeah, but I think it's a big part of it. Is like finance and economics feels so, I mean, my sweater's buttoned up all the way, but like it feels so buttoned up. And it feels like people can't get in. And it's definitely been a little bit of a gate-kept club in a lot of ways. And a lot of people just want to understand it. They don't want to know the intricacies of like the bond market, but they want to know how they can buy treasuries to hedge in their portfolio, right? And so I think that's a big part of it. And then to the point of absurdity, like the stuff that happens in the world of finance, if you really do zoom out and kind of be like, okay, I know this is impacting lives and it is, elements of it are very important and scary, as you said, like some of it is funny and it's weird. Like GameStop was so weird, right? And so you should be able to like laugh about that and have fun with it and bring people in that way. Like that sort of style of humor and comedy is important if we want to bring more people into this space.
Yeah. Okay, we got to take a quick break. And when we come back, more with Kyla Scanlon. So if somebody's starting out as an investor today, they've just downloaded an app, say they've just put Robinhood or something on their phone, what would you say are some of the best practices for, how they should start to think about where to get financial information from? Like what would you recommend as kind of a starter kit for like getting good, besides following Kyla Scanlon, and a Wall Street Journal subscription,
Yes,
of course. Sorry, we need to pay for this this segment here. What would you recommend are some best practices for people?
Well, it really depends on how tuned in they want to be. Like a lot of people, all they want to do is just have an investment account and buy and hold until they are ready to take some money out. And so in that case, like I think you should have a basic understanding of like how the Federal Reserve is making decisions, because that impacts so many aspects of our lives, and like what fiscal policy is doing. And so I think in that case, like just having a general subscription to news, definitely the Wall Street Journal is important. Just being like a little bit tuned in. But for people that want to go a little bit deeper, there's a lot of really good educational resources out there. George Mason University and Tyler Cowen have like a big intro to economics style course available for free on their website. So there's a lot of free resources, but it is challenging. Like that point I was trying to make, using a telescope as an analogy, as a starting point for people, like that is really the hardest part. Like when I talk to I've been traveling for the past year on book tour with my book, and I've been to over 20 university campuses, and I've been to like, I think over 25 states at this point. And something I've heard on every campus and in every state was that people just don't know where to start. And that's why you asked me this question, right? But I think it is still hard to figure out where to tell people to start. Like the best thing to do is like open up an account and try to just like dollar cost average, like just put some money away each week or each month, whatever you can afford.
How do you know that somebody is selling you something or trying to get you to believe something that is not in your best interest?
Well, this is where media literacy is important, which I feel like we've really kind of failed on as well. But I think the biggest thing is like if they're asking you for a bunch of money and being very abstract in what you get in return, like if they're like, hey man, give me $20,000 and I'll make you $1 million. And you're like, well, how are you going to do that? They're like, don't worry about it. That's really where you have to be careful. It's just like gut checking where people are coming from, what they're promising you, how much they're asking for. And also being cautious around the body language and the word choice that people are using. Like if they're trying to scare you, they're probably lying to you, right? Like if they're manipulating your emotions to get across a certain story and to get you to do something like invest in their course, perhaps that's when your red flag should be waving in the wind.
So let's talk a little bit about the current moment. And you sort of came up with this framing for the economy a few years ago. I'm sure you're both thrilled and tired of hearing about the vibe session and the vibes. By the way, thank you for that. We use that all the time. It really
you all
perfectly
do?
Sure, we say that all the time on our podcast.
Oh, cool.
It just really frames things well.
Yeah.
So and we should credit you more often for that. I don't think that we do.
A shout.
But what I want to ask you about that is that it seems like, is that a permanent state of affairs, basically? Because now we've gone through, we attributed a lot of that to, I think at the time, to, something to inflation, right? To something about, kind of the Biden presidency, the post-pandemic era. Now we have a whole new context, right? Obviously, some things are similar, some things are different, but we still seem to be in a situation where the sentiment data is running well behind the sort of hard economic data, right? You mentioned the jobs report. Looks all right. There was a GDP report that was sort of scary, though, if you kind of, as you talked about recently, you sort of poke some holes into it. It's not quite as bad as it sounds. What is it, you think, that makes people feel negative even when the data is telling them is they should not? Is there something that we should start to think about?
The word vibesession has actually been around for almost 3 years now. We had this weird sentiment tick down, and inflation was going down, GDP was strong, the labor market was strong, so people were feeling really bad, the economy was okay. And that's kind of how we are now. And obviously it's a little bit different because we have so much uncertainty now. We just don't know what sort of press conference we're going to get and what sort of announcement we're going to get about tariffs. So people are really feeling bad because of that uncertainty. But when you look at the GDP report, under the hood, the economy is still relatively strong. People imported a lot of stuff to try and get ahead of these tariffs. But if you look at the labor market report, we saw a lot of losses in government jobs because of DOGE, tech jobs because they're recalibrating over there, I think. But most sectors are doing okay, right? Inflation is doing okay. So
we're worried about it in the future, but for the time being,
right? But the future matters, and this is
matters.
the tough part about sentiment, and it's why the Federal Reserve pays so close attention to inflation expectations, because how people feel ultimately might manifest some sort of downturn. And it sounds nuts, you're talking about vibes, you're talking about manifestation, it sounds like astrology, but some aspects of finance are definitely.
I think we all can say that in our lives we know that how we feel influences how we behave, right?
Yes, absolutely, exactly. If you're really worried about the economy, you might stockpile, buy up a bunch of rice and beans and, not spend any money for the next 6 months.
Coffee. Don't forget, people always forget coffee when you're stockpiling. I just want to remind everyone. Okay.
We do. And one thing with the vibe session was people thought that it was saying that the feelings don't matter. A house is both a speculative asset and a place to live.
Right.
And so people feel bad that they can't achieve that foundation of the American dream, right? And so that shows up in how people feel. And things like childcare and elder care shows up in how people feel about the economy. And the economic data might be saying things are okay, but you have a housing crisis, you have the Gen X generation getting totally squeezed on both ends with the childcare and elder care cost. And then you have inflammatory aspects of social media where people, the first thing that they see when they wake up in the morning is a headline telling them that the world is going to end. And so, of course, people feel bad. But there are real structural factors to that sentiment being negative that isn't always captured by the economic data that we use.
In people's behavior, though, and you mentioned people traded actively during Liberation Day, right? If you just go by, say, Robinhood's earnings, that does not paint the picture of people who are feeling they just want to get under the covers and hide, right? People are they're betting on stocks, they're buying options, they're trading options, they're trading in a kind of event contracts and things like that. So people act kind of very bullishly, right? And we know that consumer spending has been pretty strong. I mean, now that the data's a little mixed, but are the way that people talk and the way that people act just sort of different when it comes to the economy these days?
Yeah. I mean, Visa actually said that in their earnings call. I think it was Visa. They were people, the sentiment, we see the sentiment reports and it's looking bleak, but people are still spending money. And Treasury Secretary Scott Bessent kind of said something similar where he was we do see this really negative sentiment, but, people are out there spending still and doing stuff, right? And we are seeing weakness and softening and spending data and people's plans for summer and stuff like that. So it is a disconnect in a very big way. People feel a certain way, but their behaviors don't always reflect how they're feeling.
So cutting through the noise of these kind of sentiment and other data signals, what do you think that investors should really be kind of paying attention to most right now?
Tariffs. But I think
we do that a lot around here too.
Everyone's a little stuck in the tariff laundry cycle. But I think what I am really focused on is thinking about what's next for the United States. But I'm also really excited for like hard tech stuff that's happening. Like a lot of people are building really cool, like Waymo is really interesting, the self-driving cars. We're seeing a lot of investment in that stuff, like not to say stuff a lot of, but like the self-driving cars I think are really cool. I think we're achieving some cool stuff with certain startups around like medical manufacturing, and so that's something I'm paying very close attention to, because to that point about it feels like the United States society is falling apart physically. Like if we can really invest in hard tech and get those things up and running, like that can be maybe what fixes it and restores an element of hope to American society.
So as an investor, that means like looking at, innovative companies and like who might be funding or benefiting from, the advent of quantum computing or whatever the next thing around the corner is.
That sort of stuff. A lot of them are still private companies, but I think some of them are public. So that's a very exciting thing to me. I've really enjoyed seeing the focus on that from the VC space. And just a lot of people are like, okay, well, we can have all the software and B2B SaaS in the world, but what if we had, cool physical things? And I think that'll really do something if the companies that are working really hard on that are able to achieve it.
Well, we're going to take one final break, and when we come back, we're going to have one last question for Kyla Scanlon. Welcome back. Kyla, we wanted to ask you one last question. In 30 seconds or less, what's the biggest concern for investors right now?
Uncertainty. I think everyone's just like, nobody knows what's next. And it is a very pervasive topic. Everybody's talking about it all of the time, right? Like what's happening, what's going on. So I think that's the biggest concern for people is like, what are the tariffs going to be like? So I think that there's just a lot of questions in the air that are creating a lot of uncertainty for investors. And then I think number two is the AI bubble. Like we have seen some softening and elements of that. And if we do enter into a real trade war with China, like that could really put a dent on things for those companies and how we think about that. And the Mag 7 has been just dragging the S&P 500 along.
So we don't know what's coming. And the things that have been working might be on the cusp of not working anymore.
Right, exactly.
I can see how that would make people anxious. All right, well, Kyla, thank you so much for joining us. This has been a great conversation.
Thank you.